We are with Jeff Zhao, Head of Ecosystem at DigiFT. Hi Jeff, good morning. How are you?
Morning, Jonathan. Thank you for having me here.
How was the summit so far?
It's pretty good. It's great to have a pulse check on the market right now. And I think, frankly, the talks on the side is more candid in the panels. And it's very exciting to be in the room of the traditional finance operators and digital asset provider. That's the intersection we're sitting at DGFT.
Okay, well, I hope the interviews qualify as the off-stage conversations that are candid enough.
Of course.
Let's see, you're joining a tokenization panel that brings together retail brokers, fund infrastructure, and on-chain platforms like yourself, I would say, or tokenization. What are you hoping to hear from other market participants?
I think from my side, I'm more sitting on the ecosystem side, right? So the problem we're trying to solve, or the question we are trying to solve is how we get the asset to the investors properly, right? And I think we are definitely seeing a trend in the crypto market that people are holding more diversified asset from concentrating their portfolio, say 80% or even 90% on Bitcoin, and they are slowly diversifying their portfolios.
Within the digital digital assets.
And especially the real world asset. Like people want to put money in, say, assets like money market fund from the States or even US equities, right? And I think that's a bigger question we are trying to answer is what's the operational or the distribution gap that we're trying to solve. We see a lot of advancement from the infrastructure side and from the issuance side and also from the regulation side. But I think it's more important to have everyone in the same room to talk about how we solve the most important problem, which is the distribution gap. So it's very useful to be in this
That's
channel,
what we
right?
try to achieve. And in this room for retail brokers, providers, for retail investors, there are two camps of tokenization. One is a token that is the equivalent of ownership, but is not an ownership. I think that's how Robinhood started. And the other is actual on-chain transfer of the assets. It's tempting to say that the former is bad and the latter is good, but perhaps can you weigh in on the differences and when it makes sense to do each?
Sure. I think they both have pros and cons. So for the first methodology you're referring to, I think it's just easier to set up,
yes.
And the efficiency. But the problem is it's very easy to set up and it get you up to the speed of tokenization, right? But you still have the off-chain layer of it, so you don't capture the full efficiency gain in tokenization. And sometimes you have to deal with the reconciliation off-chain yourself, right? And for the second method, it's more ambitious and it's definitely more efficient, but it just take a lot more in the infrastructure side, in the jurisdiction side. So I don't think it's fully ready yet. I realize that the whole industry will run the two models in parallel for a while, but in DGFT, since we are fully licensed in both Singapore and Hong Kong, we are ready for the challenge on the both methods.
And you work with institutional capital a lot. What roadblocks do you see there as opposed to the retail camp that we've just sketched out?
Come again?
I'm asking what roadblocks do you see on the institutional side for greater adoption?
As I just mentioned, I think there's a lot of advancements in the infrastructure side and in the regulation side. I think it's more on the operation right now. So two things I would mention. The first one is I think people are just still having a little bit difficulty on the on-run operand process. It's taking longer than we imagined it would be, right? Right now it's probably still T+1, T+2, and the second one is internal operations for those big institutions.
T+1 is for settlement of what? Of on-chain or not?
For on-ramp and off-ramp. So you convert,
okay.
You convert fiat to crypto.
Yes.
And the second one is the internal operation side. I think the traditional finance institutions, they are not very familiar with the Web3 operation flow yet, like the wallet management, the KYC, and the AML on-chain. So at DGFT, we are trying to solve this problem by abstracting the complexity for our clients to make the workflow look more similar to what they are used to in the traditional finance market.
And we mentioned compliance, KYC. The MAS has a very proactive approach for the better, I think. And how does collaborating with them or having their approval works for you?
So in finance, I think the precondition for every conversation is basically trust, right? And I think being regulated in one of the most advanced jurisdictions is definitely helping us. And I think we are very fortunate to be in the sandbox back in 2022 and to get the full license in 2023. And so right now, I think what MAS did brilliantly is to understand the technology in the early stage and also have great investor protection without blocking blocking the whole thing. So I think definitely helping us. And since we are fully licensed in both Singapore and Hong Kong, so it saved us a ton of time to engage with our potential clients and to build trust from the beginning.
That's good. And if we look forward, what is the thing you're most excited about? We talk a lot about the cutting edge of innovation, but what are you working on so we can talk about it next year?
I would say two things, and they are sort of interconnected. One is I think there's more clarity in the U.S. The Clarity Act is basically advancing in the U.S. Senate, and we are seeing coordinate efforts from SEC and CFTC to bring more asset on chain, and I think definitely good news, and especially tailwind for the Asian market. And second of all, we are seeing more institution inflows, not only from the asset manager side, but also from the demand side. For example, like JP Morgan, Invesco, and Franklin Templeton, BlackRock, they are all big players coming on chain, and that's really exciting.
Okay, so we'll look and see how it all looks like next year. Thank you so much.
Thank you.